Good morning, everybody, and this is your S&P 500 day trade setups for today. So pretty much all the FANG stocks results are out now. We had a complete miss by Facebook, Meta, down 25%, and then we also had Apple and Amazon come out yesterday, which were kind of just roughly what analysts were expecting. But there's obviously been some noise with one of those results that we pulled back late in the session. So for me, this wedge is still very much in play. What is concerning, though, when you look at the wedge, is the crossover of the moving averages. So it could basically just turn out into a channel. Now, what I would prefer is a break of this bottom line on the wedge, and then I would prefer the channel to be formed like that, so it's not too steep. And then you still got a gradual path to the upside. The other way is obviously a break of the wedge to the upside, and then that becomes a much steeper channel. So that's kind of the view that we're looking at the moment. But if you see this, we are in between the moving averages. We do have a crossover. We're not holding the 155, which is what we need to do. But the important thing here on the weekly, you can see how the 155 on the weekly is playing a massive role here. So this could very well be a rejection. If it does turn out to be a rejection, you'd want the breaks below the bottom here before you start looking at that, and I'll give that to you shortly. Just on the monthly, this is a piercing pattern on the monthly. So if we close anywhere in this area on Monday, that is a piercing pattern, and then you would more than likely be looking for an opportunity higher, which would then be a much bigger wedge on the monthly with diversions. See, there's our swing low, there's our current swing low. Look at the oscillators. So everything to watch here. Higher time frames is starting to look a little bit bullish, whereas your lower time frames are starting to look a little bit sad. So if we drop down to the 3 hour, you can see we did sort of touch this area. Not entirely convinced that that was intended during the trading session, because that's quite late in the trading session where that happened. We've got a crossover of all the moving averages. This could be a retest of the 155, or it could be a retest of the bottom of the wedge, and then you also have a bit of a 3 hour channel forming there. So I'm just going to get rid of that for now. This is an area of interest, to be honest. And there's just one more area lower down. If you look at the years, well, not this year, but the previous years with the S&P, you would form a bearish price action like this, and it would never play out, really never play out. So you break the wedges like this, but you'd find support lower down, and then it would rally back into the wedge, and then eventually force the issue and form channels. So that could be what's transpiring. We do have some signs of recovery in the economy, but we've still got quite a number of earnings to go through. So I think investors are still a little bit jitterish at the moment. And 3600 was, I think it was 3630 or 3640. It's all the way down here. Was the open interest on the options. So is that still a major level that's in play, or are we now looking at something different? So look at the hour. We're in amongst the moving averages. I don't really trust this at the moment. That's what I'm getting down to. I really don't trust what I'm seeing here. The higher time frames there's all the indication that we are starting to turn, and then the lower time frames, it's looking like we are continuing to the downside. So you can see what I mean by we just meandered, and then obviously something in one of the results that came out was seen as negative, and then we had a quick drop of 1.5%. So if you just follow this picture that we're seeing here, we should be looking for a short off this gap here. Let me just do that. So something like that. We should be looking for a retest of that, and then a short to the downside. But I'm not convinced. I'm really not convinced of that. I'm kind of more leaning towards the fact that the this is a pullback in this trend, and we'd be looking for support of one of these areas. The trend is up until it's not at the moment, and the hour trend has been up. Granted, we're below the moving averages, but we also haven't tested the break, and we haven't really got a crossover yet. So that's kind of the view that I've got at the moment. I really think we are probably going to try and find some support down here, but at the same time, I think we're going to try and reject this area here at 38.15. So difficult one, I think, for me today. I think my advice is really just sit back and wait. If we reclaim this 38.15 and come back and find support there, then I would be bullish, and I'd be looking for a move up to at least 38.90 area again. But for me at the moment, trying to find an opportunity down here is a bit risky because it is bottom of the wedge. So very well could see a break here for a move down, and I'm not sure I want to stomach a stop of 600 points, because that's kind of what you're going to have to do. You're going to have a stop below this previous swing low on the higher time frames in order for you to have some confidence that you're going to get something out of it. So I'm very cautious. If I do see something later today, I'll let you know. But as it stands now, on the other indexes, I'm sitting on hands. I'm not touching them. This one there's a glimmer of hope either way, but I'm not comfortable and not confident on which way it's gonna turn. So yeah, just watch the comments. If I do take a trade, I will let you know in the comments well, not in the comments, but on the YouTube posts. I'll let you know there. Anyway, guys, that's kind of my view today. Probably worthwhile just ignoring it and sitting back and enjoying the day, not trading. But there could be something brewing here, to the short side or the long side. And I think the trick is just to find the confirmation of what's going to happen. Anyway, hope it helps you somewhat, and we'll catch up with you on Monday morning. Cheers for now.